Hello everybody, this is Bitcoin Macro, and this is the second video for today, guys, where I'm actually going to talk about the data regarding the Bitcoin market. Some of them affect the general market as well, so it's not just going to be about Bitcoin, but the focus is going to be Bitcoin. And then I'm going to go through some of the traditional markets as well. So it's going to start with some of the stablecoin ratios, then I'm going to go through funding, long short ratios, data from futures. And then I'm going to go through some moving averages, through some models and stuff like that. And then I'm going to finish up with the technical analysis of traditional markets. But before that, guys, please remember to like, share, and subscribe. Click the bell icon down below. Just do it now so that you can get more videos like this, which are more educational rather than just simple, technical analysis or with targets and stuff like that. So the first thing that I would say is that overall, the crypto market seems to be getting cheaper and cheaper when it comes to how much money there is in the market. And the stablecoin ratio is a great ratio because it is telling us how much money there is in the market versus how much these assets actually cost. Of course, stablecoins have tons of different use cases, and potentially most of the people who hold those stablecoins have them in there because they don't have anywhere else to put them. They don't want to put them in the bank. They want to have them there to buy assets. Maybe they are yield farming. Maybe they are trading futures, perpetual swaps, and so on. They use them as cash or whatever you can think of. So there is demand for stablecoins outside crypto, like not just for people to just trade them or just to wait for people to trade crypto. However, the more money there is in the market, the more available they are for people to buy, the more that money can act as support. And for now, that ratio is at about 12. And I don't really know how much lower can it go, because every time we have been going a little lower, not much lower, we have been finding support and the market has been bottoming. We saw something similar happen with those markets, with the conditions right there. Of course, yield farming has changed a lot of things along with all the extra use cases for stablecoins. But if we adjust for them, we can see that we're slowly going lower, and every low isn't really that much lower than the previous one. So maybe that has to be adjusted for, companies, big companies like FTX and others stepping in, and they have all that money sitting around. Maybe they are milking retail traders and so on, but overall, I would say that the fact that this is going lower means that although the market is so much cheaper, we have a lot more money in as well. And this might be a great indicator that, even though this might be a bear market, it's probably going to end soon. And to me, this is just the money that's in stablecoins. But if we start adjusting and assume about the money that there is on Coinbase and all of these other exchanges, maybe in there it's sitting like another, I don't know, probably stablecoins have about 100 billion right now. Maybe there is another 50 billion sitting on those exchanges. So to me, if this ratio keeps going lower, I don't know how much lower can it go, but it's going to be an incredible buying opportunity. And at some point, we're going to bounce. Now, many of these stablecoins might be redeemed at some point, because what is all that money going to see and do in the crypto market if people don't actually want them? So maybe we'll start seeing some discounts for those stablecoins, and then we might see some firms redeeming those stablecoins to stabilize the price. But for now, we do see that the price is pretty cheap. Now, the next one that I want to talk about, guys, is the funding rate. It had gone pretty negative recently, and it hit some really, really negative points, which whenever we have seen them, we have seen the price go higher. But the bounce so far has been weak. Like I've mentioned in the previous video, we have been rejected at resistance, and the funding rate is going back to positive, which isn't great. Now we have, even in a bear market, we will have negative rates. Okay, whenever we see negative funding rates, especially significantly negative funding rates in bull markets, that's a great sign, because we do see the funding reset a little bit. But when we have a persistent negative funding, we want to see that price to be going higher, not lower, and then that negative funding to persist or stay very, very low for a significant amount of time if we want the market to go significantly higher. So yes, funding is negative, but that doesn't mean way too much right now. The situation is kind of unclear to me, so I can't really tell you guys what's going to happen next through the funding rate. The fact that it's going positive is not great, so that's why I'm saying that the market has to move quickly, because right now it's not at the best place. Okay, it's sitting at support, but it doesn't really look that strong either. Okay, now the long short ratio for Binance, at least these are the ones that are included here on Coinalyze. They are relatively low, but they are not that low. Okay, so for example, these long short ratios were so high for so long that usually for this to reset, they have to go much lower afterwards. Now we have had a little bottom when the long short ratio hit 0.8, but the same way the long short ratio was up to about 4 on Binance, or 3 or 4, 2 or 4. This means that potentially it could go all the way down to about 0.5 or lower, and the markets still go lower. So I haven't had the proper big reset. Now if I'm gonna put this on the 12 hours so you can see the data all the way back to June and October, like you can see the market being below 1 to 1. The long short ratio was below 1, and that's why the market kept going higher, because we had significantly lower long short ratio. But once they started growing a lot, we did see the market slowly slow down. Now the Tesla news did play a role, and that's why we went much higher at the time, but after that we did have a collapse. Okay, and this doesn't look great right now, because again, when we come from a regime of such high long short ratios, potentially the long short ratio will stay low for quite some time, and will go way below 1 all the way down to 0.5 or even lower before it goes higher again. Now the same thing can be said for the long short ratios on OKX, which is now still above 1. It's close to 1, so it's not really that high. And whenever we have seen it go back to 1, we have seen some bounces. However, I do remember that during the summer and even before that, we had seen the long short ratio be also at about 0.6, and that was a period where Bitcoin was pretty bullish. Now on Bitfinex, we do see the long short ratio to be very, very high. Longs are at very elevated levels and shorts are at very low levels, which is not great. Now we have seen the Korean premium collapse, which is also not that great. Some people might say, okay, the market is normalizing, there is less froth and so on, but remember now, Korea is a major source of demand, so if that demand is so much lower, I don't know how great that is. Of course, having that dip in Korea is also good because it kind of restores some sanity on the market. The arbitrage window is closing down, so there might be less sell pressure to an extent from some of those people who are doing the arbitrage there, and maybe all the people that have been selling in Korea will slow it down. But to me, this doesn't look great because we had seen Korean premium go really high back in 2017, excuse me. And then once the bull market was over, we did see the premium collapse. For the rest here, I found it pretty interesting that during the dip yesterday, Bitfinex had actually a premium versus Binance, which is very, very important. It's something that we need to keep in mind, because it does mean that there was a little bit more of demand. Now, I don't know if I say Bitfinex, I hope I didn't say Binance, but both Binance didn't really have a major discount or premium versus Coinbase, but Bitfinex actually did, and we also saw that with the long short ratio data, because longs have been opening, they haven't been collapsing. On the other hand, we have seen more longs open and shorts cover. So, when shorts are covering and longs are opening, that's not a great situation. Now, on the premiums, we have seen premiums collapse from about 20% on the quarterlies about 3 months ago, And now that we have the new quarterlies, we do have the price of the quarterlies be almost close to 1. Okay, so there's pretty much almost no extra funding. There's no extra, premium. It's almost about 1%, which yearly is only about 4%. However, we haven't really moved on to backwardation, and I'm not seeing a lot of strength. So usually this resolves with the premium turning into a steep discount because people don't want to have those longs open. So whenever we have premiums be so high, at some point they do collapse, and they do collapse pretty badly. So in my opinion, we haven't really seen capitulation yet. To me, capitulation is something near -5, -10%, and sometimes it's persistent. So we haven't seen persistent low discounts or premiums on the futures, so there might be more downside. Now, the GBTC premium has gone up, so it has gone up from about -20, -25% discount. That was a discount that I had, and now it's at about -15%, maybe -10%, because I don't really have the actual GBTC premium. There has to be some adjustment, but overall, this doesn't look great. Okay, we are in a pretty tough situation regarding the GBTC premium, and I'm looking at the one from FTX because it just makes my life easier. Now, another important thing, and now I'm moving back into models, the stock to flow ratio is so low that if the price doesn't go up now, at some point the model will break. And if we're not even at the end of this mini bear market, and we are already below the low of the stock to flow multiple from what we had in December of 2018, that's going to be a very, very bad period for Bitcoin, and at least for those that have bought based on the stock to flow model, because many people really believed in the model. They thought it's a perfect model. I don't really believe that. I have used it to see if maybe something's overvalued or undervalued, but for now this looks ready to be broken. So the price has to really start rallying very quickly, otherwise the model is going to have some issues. Now, some people might say the model is going to be fine. I don't know when the model starts breaking. They can make all sorts of excuses as to how the model might still be valid. I'm very surprised we didn't really go to 100K at least, but such is life. Now the next one is going to be the major multiple bands, and we have the key support at 23K, and we have the key resistance at 47.5K. Currently, we are in a bearish territory based on the major multiple bands. We have seen that the bottom line has been a pretty good place to start buying. So who knows, maybe I'm wrong, maybe there is going to be a hard capitulation, but we might not really go much lower than that. Now, if this starts trending lower as well, which at some point it probably will happen, maybe that adjusts and we don't really break much below those lines. Now, if we get an extreme capitulation, guys, I believe it's going to happen so quickly, and then the bottom is going to happen very, very quickly as well. So in my opinion, if the market gets more oversold than it actually is right now, because currently it's fairly priced, I would say, but if it keeps going lower, it's going to get very, very cheap, and potentially this could be very, very good for us, for the people that want to buy. Now, we have seen something very important here, in my opinion, which is the 350-day moving average. So this is using the 350-day moving average. As you can see that every time it was touched in a bull market, other than, let's say, at the beginning of the bull market, the retest meant that we have lower to go. We saw that in the 2018 bear market, we saw that in the 2014 bear market, and we also saw that in the 2011 bear market. So after that broke, the price went much lower, at least 50-60% lower. So just be prepared, guys. That's all I can say. It doesn't mean that this is guaranteed that it's going to break lower, but for now we might see some extra relief because we just touched the 350-day moving average. But after that, after the bounce, we'll potentially go lower again. Next one is going to be the 200-day moving average, or at least that's the approximation of the 1,458-day moving average. Or maybe I'm wrong about what this one is. But in my opinion, I think, I apologize about that. Yeah, that's a 200-week moving average essentially. And the support is at about 12 to 14K. This is about where this moving average is going to be at. It has been a pretty good place to start buying, in my opinion, because of the Bitcoin halvings and all that stuff. This works very well because Bitcoin is a trending asset. It will keep on trending. I don't really believe we're going to see Bitcoin really slow down. Maybe some cycles, some pumps are slower. Maybe sometimes things happen very quickly. Some other times they're going to happen more slowly. But to me, we are probably trapped in those mini cycles, maybe, where we have very quick pumps and then things slow down, and then quick pumps and then things slow down. And that's probably because of all the derivatives in the Bitcoin market and crypto in general, because people are speculating on altcoins which get very bubbly. Then we also have all these returns coming from the perpetual swaps and so on. So that's a very, very important thing to remember, guys, because now a lot more money is flowing into the market, plus institutions are gaining more and more money out, which is not as bullish as it was before. Because when it comes to retail traders, most traders keep the money in the market, or they will take the profits, but then they will keep on focusing in crypto. But when it comes to institutions, they take that money out and they want to pay their salaries, their employees, their shareholders and so on, their investors. So it's a very, very different situation. Now we also have the power law, the Bitcoin power law. Of course, I forgot to mention this is the buybitcoinworldwide.com website, which has some interesting indicators. And the next support is about 23-24K. We never really reached the top, so maybe the bounce will be much easier, much faster this time around, and maybe we also have a bottom higher up. So who knows, maybe I'm wrong on us getting even down to 20 and even lower, 20K or lower. Maybe 24, 25K is the bottom, but that's essentially the first target that I have right now. Now, when it comes to the fear and greed index, guys, we have seen a lot of fear in the market. However, you have to be aware that although we have seen a lot of fear, that doesn't guarantee that there is a bottom, because we have seen persistent fear many times before. At least this indicator came out during the bear market, so I don't really have much data prior to this. And maybe some people think that, oh, we are in the same situation as March of 2020, but that was after a big bear market and the price had a perfect double bottom and a perfect crash, and everything was perfect in terms of the fundamentals of Bitcoin, crypto, and regarding the money printing and so on. So who knows? To me, this structure resembles a bear market, like we had the froth, like we had in June of 2019. In general, Q2 2019 was a big bull. Then we had the big crash. So this resembles that quite a bit. So in my opinion, there is lower to go at some point. Again, that my mind will change once we see the price stay above 43K. Now, again, some other models from Willy Woo's website, from WooNomic.com, the NVT premium is very cheap, so the price is cheap. However, we have also seen that before during two times, the COVID crash, but also when the market crashed in 2018, when it fell down to 6K, and that was the start of the bear market. So who knows, maybe that's another signal that, we have lower to go after getting pretty expensive. Now we also have the NVT signal, which actually had given some signals that, the market was quite frothy. up here there are different ways. This is an adjusted signal from Willy Woo's website. And again, the only time we had actually seen this adjusted signal be hit was during bear markets. Again, price is cheap, but it can get much cheaper. The other one that I want to talk about, guys, are these Bitcoin price models, which actually are indicating that the price could bottom anywhere between 24k. There is some decent support there again from another indicator, so there is a lot of confluence for 24k to at least give a strong bounce along with the CME gap, and then the next ones are about 20k, 16k, and down to 10k. But of course, these are gonna start going higher a bit. They're gonna rise a little bit, keep rising for some time. But again, anything between 12 to 14k is probably going to be the perfect bottom. But to me, between 24 and 18k, there's going to be a lot of support, and we're going to see a lot of bounces over there. For now, there is not much support. We have turned, the market seems to be bearish, but again, maybe this head and shoulders pattern is not going to play out, and we are going to start rising very quickly because the price is already cheap based on some models. And if this is still a bull market, it has to move very quickly and start rising. Now, the other one is going to be this one here, which is the Glassnode data that we have over here. And actually, these are indicating that we are in a bear market. I haven't really seen the SOPR, the spend output profit ratio, stay below the one line for so long outside of bear markets. It's very, very rare for this to happen. At least I'm using the 1 week moving average. So this is not great. Of course, again, it's cheap because people are selling at a loss, but you know, if they keep selling and more people start losing money, then there is more downside. Now, we have seen the supply actually that has been last active for more than 1 year to actually slowly tick higher. But the truth is, guys, a lot of people have moved their coins over the last year, and especially over the last 6, 7, 8 months when the big bull actually began, and these people actually started selling. So this doesn't mean that, you know, this is quite different from the previous one, and you shouldn't be expecting the same things to happen, especially because back then we had the forks, we had the Bitcoin Cash fork. So a lot of people had to move their coins to sell their fork coins and so on. But whenever we have seen this turn, it's usually after a few months of bear where people are refusing to sell, but not that many people are buying. So the accumulation starts in the bear market while the smart money has probably already sold. So many people have already sold, but now the accumulation is starting, and that doesn't guarantee that we're going to go higher, because we have seen during bear markets this supply that is actually essentially inactive go higher and higher, but there's so much more supply that people are selling, or actually I should say there isn't enough demand. So people are not really selling, but there aren't that many people buying, so both things start dropping, and then at some point you do get a capitulation at the end where you have a lot of people capitulating, and that is what forms the bottom. So that's it, guys, from regarding the fundamentals of Bitcoin, the quantitative data and so on. So I would just like to have a little look at the traditional markets to just have a little look of where we are right now. Just give me 1 second. So gold doesn't look great. It has been going down. Silver doesn't really look great. Oil looks pretty decent, although it's coming at some pretty important resistance over here. So any dip down to 66, 67 is for buying regarding oil. In my opinion, oil has begun a new bull market, this was the end. This massive capitulation was the end of the bear for oil. Regardless of the money printing, I do believe of whatever people are saying, reflation, inflation, stagflation, I do believe that oil is going to go higher because of all the underinvestment and because OPEC and all these people, the people are controlling oil. Certain markets are controlling oil. We have seen a big collapse in the demand for oil, for the production of oil. So such big production cuts, along with all the green energy movement trying to cut down on oil, a lot of underinvestment for oil exploration is definitely costing the normal people, because oil is going to keep getting more and more expensive. Now, the Nasdaq keeps trending higher, and I don't really see any serious problems for Nasdaq. Maybe there are some issues. Maybe we have topped. Maybe traditional markets have topped, but it's still early for me to judge. Now on the German stock market, on DAX or the Nikkei, I am seeing some extra weakness. However, on the US markets, I do see a lot more strength. When it comes to US yields, I do feel like they are probably gonna go lower. I do feel like inflation isn't going to come. I don't really think we're gonna get any major inflation shocks yet. But who knows, maybe I'm wrong and inflation does come and rates go higher, at least in the US. When it comes to currency pairs, so far what I am seeing is that the US dollar has had a little bit of a bounce, but nothing that's gonna really hurt the markets. And kind of get the same thing from the VIX. We had a little pop right there, but that quickly collapsed. So people got shocked a little bit on Friday, but that was nothing more than a correction. Now, again, if I start seeing that the Nasdaq lose 13.8K, that would probably be a bearish signal. That would probably worry me a little bit. But for now, I do believe all these are buy the dip opportunities, because we are seeing the Nasdaq also break higher. So for now, if this is not a trap, that means there's more upside for stocks. The same thing holds for the S&P 500, which has been testing this resistance here, but the more it's testing it, the more I think it's gonna go higher. I do believe this sort of channel is going to hold, and there is more upside coming soon. So let me redraw this for a second to just have a little look of where we might be heading next. So again, we haven't really broken below any key level, and that's why I feel like there's more upside coming. Now, if we start losing certain levels like this one, I would be cautious, and I would be thinking that maybe finally we will get some downside for once, because I don't know, I feel we should be getting some downside. We have had big corrections in the Chinese stocks. We have had correction on copper, which has been bouncing now off support. I don't really want to say that the reflation trade is fully over. Maybe for commodities it's over, but if yields go lower and the stock market bull just continues, I do believe that the main beneficiary is going to be the Nasdaq, it's going to be tech stocks. Maybe some stocks do get hurt. However, companies like Amazon will benefit from the deflation, and we have seen several companies benefit from that deflation for quite some time. The ones that get hurt are the smaller companies who can't really borrow with zero rates, because zero rates definitely benefit those bigger companies. So that's it from me, guys. Hope you enjoyed this video. For now, what I would say is I'm kind of cautiously bullish still on stocks. I am neutral to bearish on commodities and cryptocurrencies. I don't really see great stuff. Who knows? Maybe these corrections are nothing more than simple corrections and we're going to continue higher. But I would suggest that you guys be a little bit more cautious with your money. Don't really overextend yourself. Don't really risk way too much until we get some more clarity, because if the Nasdaq keeps on pushing higher, if the Bitcoin market and cryptocurrencies start breaking above 43K, then maybe we have a resumption of the bull. However, Sometimes cryptocurrencies get the memo much faster, much earlier. They do know what has been going on because of these changes in liquidity. We have seen other markets have changes in liquidity as well, and the cryptocurrency crash preceded those corrections, and we have seen that happen several times before. So who knows, maybe cryptocurrencies were the canary in the coal mine, indicating that stocks are going to drop. For now, I would say be a little bit more cautious with everything. Still be bullish, at least in stocks and that kind of stuff. That's the trend, that's where the trend is. However, I would suggest don't take many risky bets and try and play it a little bit more safe. So thanks a lot for watching, guys. Please remember to share, like and subscribe. It definitely helps the channel grow. And also you can follow me on Twitter, Telegram and TradingView for more updates and more content like this one. So once again, thanks a lot for watching, and I'll see you on the next one.